Today, we're diving into a topic that has garnered a lot of misconceptions and myths. We're talking about the VA loan program. At MyCityLender, we believe that the VA program is one that our government does really well to support our heroes. We want to do our part in making sure that heroes know all about their home loan benefit and hopefully bring some clarity to some pervasive myths out there. So, whether you're a veteran or a civilian interested in learning more, this episode is for you. If you do find any value in our videos at all, please do me a favor and hit that thumbs up. It helps the YouTube algorithm push it out to more people and helps us accomplish our goal of educating home buyers and sellers. And if you like the information in this video, do me a favor and hit subscribe. Okay, let's get started separating fact from fiction. Myth number one, VA loans are only for first-time home buyers. Contrary to popular belief, the VA home loan program is not limited to first-time home buyers. It is true that many veterans take advantage of this program when purchasing their first home, but it's equally available to those who have owned property before. Additionally, the VA loan program offers veterans the opportunity to utilize their benefits multiple times, even if they've used it in the past. Myth number two, VA loans take longer to close than conventional loans. This myth couldn't be further from the truth. While it's true that the VA loans require additional documentation sometimes and appraisal requirements, the idea that they take longer to close is simply not accurate. In fact, the VA loan process has improved significantly over the years, and with a proactive approach from both the lender and the borrower, the closing time can be the same with that of a conventional loan. Myth number three, the VA appraisal sticks with the property for 6 months. This is probably the most pervasive myth of all, and it's absolutely not true. The VA appraisal sticks with the borrower, not the property, and does not impact the future VA transaction on the same property. The purpose of the 6-month time frame is to ensure that the VA buyer has plenty of time to close their purchase or refinance loan without having to order or pay for another appraisal. I have another video going through this myth in great detail, and I'll include a link down in the description. Make sure you go check that out. Myth number four, VA loans have strict property requirements. This is another myth we come across pretty often, and while the VA does have specific property requirements to ensure that the home is safe and structurally sound, known as minimum property requirements or MPRs, they are not overly strict or impossible to meet. MPRs include safety, structural integrity, mechanical systems, water and sewage, and pest infestation, most of which are elements that we find also in a conventional or FHA appraisal. The VA guidelines are a bit stricter with regard to who can pay for and when required repairs must be completed. In general, with a VA loan, all required repairs must be completed prior to closing and cannot be paid for by the veteran. The aim is to protect the veteran's investment and to ensure a safe place that they can call home. As long as the property meets the VA's guidelines and passes the appraisal, it can be financed using a VA loan. Have you had a VA appraisal that had some unexpected repair requirements? What were those required repairs? Was the seller able to complete them? Tell us about your experience down in the comments. Myth number five. Many people believe that VA loans can only be used for primary residence. While it is true that the VA loan program is primarily designed to help veterans purchase their primary homes, there are options for financing other types of properties. For example, veterans can use their VA benefits to purchase a multi-unit property up to 4 units and even invest in certain types of condominiums. Certain restrictions will apply here. For example, a multi-unit property, the veteran does need to occupy one of the units as their primary resident. Make sure you reach out to a qualified VA lender to understand all of your options. Finally, myth number six, VA loans have high closing costs. Closing costs can be a concern for many home buyers, but when it comes to VA loans, the idea that they come with higher closing costs just isn't accurate. In fact, the VA regulates what fees and charges can be assessed to the veteran to ensure this. Additionally, veterans have the option to negotiate with the seller to cover all or some of the closing costs to further reduce the financial burden. In a future video, we'll dive into this topic in much more depth and cover which fees a veteran can pay for and which fees they cannot. There's a lot of confusion on this topic. Remember, knowledge is power when it comes to home loans. Stay informed and make the most of your VA benefits. If you made it to the end of this video, chances are you like the information we provided. If so, do me a favor and hit the subscribe button. We'll also have a link to our playlist in the description with more videos on the VA home loan topic, including an in-depth dive into the myth about the VA appraisal sticking with the property for 6 months. Until next time, I'm Brian, signing off.